up, everyone? Welcome back to the Idiot Investor Guide with your host, Guy Davidson. Today I'm going to take you through my Hatch portfolio. It's my first month of investing altogether, and this is my first month going through Hatch. So this is the start of the journey, and it'll be interesting to see how it plays out. I'm still a bit of an idiot when it comes to investing. Definitely don't take anything I say as financial advice, but hopefully this will be entertaining and we can learn a thing or two. We can collaborate in the comments. So please, if you want to ask or say anything, give me advice, ask questions, leave them in the comments below. If you want to keep following this journey, subscribe to my channel and like this video. The main reason why I really wanted to open a Hatch account is because I wanted access to the US markets. So my other accounts on Sharesies, there's specifically New Zealand market. There's some ETFs, electronic traded funds, which is a group of companies which are managed by SmartShares and AMP, which you can invest in through Sharesies, which gives you access to those funds in the US. But Hatch will give you direct access to those funds. And there's a slight difference in management fees and transaction fees, and I'll go through that in another video, why I invest, what I do in Sharesies versus Hatch. So you can check that out. I'll put a link below. But essentially, there's slightly higher management fees in Sharesies and slightly higher transaction fees in Hatch, until actually last week, where Hatch decided to lower their fees. So I'll explain all of that in the other video and how that changes the way that I'm going to be investing. So this is my portfolio. As you can see, doing pretty well so far. I'm up almost 12%, $210, that's US. You can change between US and NZD in Hatch, so I'll just leave it in US dollars now for simplicity. So if we go down, you can see Tesla's my top performer. I've got a few individual stocks, and my idea really with Hatch is have no more than 5 individual stocks and no more than 5 ETFs, and that's what I want to do in Sharesies also. So total, no more than 10 stocks, no more than 10 ETFs at any one time. I've got pretty lucky because I invested at the start of the month and got into these shares just before they all started to rise again. You can see I've got 50-50 ETFs and companies, which is pretty decent balance. My Sharesies one's all out of whack at the moment, and I'll do another video on the Barbell investment methodology. There's a link below that you can check that out, that I've read and researched to look at this barbell strategy. My dad actually shared it with me. He wasn't super impressed that I was investing a lot into individual stocks versus ETFs, and I'm very unbalanced in certain stocks. So I'm still an idiot when it comes to investing. We're learning. This is going to be the journey, but I think the 50-50 is pretty good so far for me. I've been an aggressive stock investor for the first month. It's pretty even what I've invested so far into the different things. I was going to move away from investing in ETFs here because of the different management fees and transaction fees. Since the change, that plan might change. I'll do a whole video on that, and I'll share the link below. But for right now, I've got 3 stocks. I've got Tesla, I've got Apple, and I've got Alphabet. So that's the parent company of Google and YouTube and so on. And then I've got 3 ETFs. The S&P 500 for both Vanguard and iShares, which is just the top 500 stocks or companies listed on the US stock exchange, and the Global X Super Dividend Fund, because I just wanted to try and find an ETF that gave lots of dividends. The reason I chose Tesla, Apple, and Alphabet is because I know them reasonably well from media and consumer and everything. I choose a lot of my stocks and ETFs on research, but research more for the ETFs. For the stocks, I just look at a good price and speculate a little bit.
It's the business I look at. When you're just looking at the price of something, you're not investing.
That might change over time, and you can follow my journey on how I get better at investing. But for now, Tesla, I just see Elon Musk as a mad genius. I see that company being very forward-thinking and innovative. I don't see it crashing and burning anytime soon. and the shares used to be at around $1,000. They're currently trading at $700, but I managed to buy them at $492. So I've done pretty well there so far. We'll see how that plays out. With Apple, staple consumer product, I don't see that going anywhere anytime soon, and it was trading at a really good price as well, $253. And then with Alphabet, I mean, Google's basically the internet, so again, something I don't see disappearing in a hurry, and actually they will continue to grow. They got YouTube and other things happening as well, so down because of advertisement not really being something that's at the forefront with people struggling through coronavirus, but I see that picking back up in the not so distant future. With the ETFs, I've got the Vanguard and iShares, so that's essentially should be exactly the same thing. I more got them out of curiosity, so I wanted to see if either perform differently. It's pretty negligible at the moment. There's a slight difference, but not really. I think the dividend payout and the fees are slightly different. I think iShares actually has a slightly better dividend payout and slightly better or the same cost structure. So that's what I'm kind of looking at, which one's going to be the better long-term play. So I'll let you guys know how that plays out. And like I said, global dividend fund, I was looking through trying to find which fund over time has had historically some of the best dividend payouts, and this one looked pretty good. So that's a roll of the dice.
All right, this is for you, big time. All right, not even looking. Here we go. Hey.
Pure roll of the dice, but we'll see how that goes. At the moment, I've kept it pretty simple in here. You'll notice as well there's a difference here, 20% return on my investments, but at the top it's saying it's only 11%. So that is because of fees, because of transaction fees, exchange fees, so when you're changing your money from NZ to US. So there's a few different things with Hatch that you've got to be aware of when you're investing. So this is why I moved a whole bunch of money over at one go, and then I'll continue to do so. So with Sharesies, I'll be investing lots of little bits all the time. With Hatch, it'll be more lump sums every sort of month or quarter. I might end up investing in some other stocks later on. For now, I was looking at things like Coca-Cola and Wells Fargo for a sort of solid track record and reasonably high dividend pay stock. But for now, I've decided I'll wait and see. Looking at some other high growth CRM tools, I might or might not invest in them. I know that I've already got pretty tech heavy stocks, but it's sort of vehicles and electricity and stuff versus consumer product versus the internet or software. So it's all tech, but it's all diversified. I think most of my diversification will come from the ETFs. So that's all I want to take you through for now. It's my first month of investing. All in all, going pretty well. It's a really unique time to be investing. I anticipate a lot more volatility from the COVID situation. I don't think it's over yet, pure speculation, but if I were a betting man, I'd put money on the fact that there will be another crash likely to happen.
40,500,000 all in.
Raise all in.
I'll continue to do this every month so you can follow my journey and see how it goes. Although it looks like I've made a lot of money now, I think it'll go back down again at some point, and that's when I'll look to reinvest. Maybe not the best tactic. I should be dollar cost averaging. If you want to see a good example of that, follow Josh Wang's Sharesies journey. He's doing a really good job of just dollar cost averaging and investing regularly. But for now, because of the situation, I'm going to just take a punt and see what happens over the next couple of weeks. Join me here next month for another update, and I'll see how that tactic plays out. If you like the video, subscribe to keep following my journey, and leave a comment. I'd love to have advice on maybe what I should be doing better, questions on why I've chosen to invest the way I have, and let's just open up the conversation so that everyone can start to join in on this investment journey. That's all for now, so we'll catch you next time.